information technology group Altron has posted improved first-half earnings results, and this follows a change in its executive management earlier this year.
For the 6 months that ended in August, the company reported revenue rose by 5%, with headline earnings per share, a main measure of profit in South Africa, up 16%. The company says the improved performance was driven by its international operations. Altron says it plans to grow through a combination of organic growth and expanding offshore. It recently announced the purchase of a nearly £36 million software company in the UK. Nompu Siziba asked Altron Group CEO Mthetho Nyati what the benefits of that acquisition were.
In terms of maybe the starting point is our strategy is saying diversify your earnings. Make sure that you have got earnings coming from offshore. And today, if you look at the composition of our earnings, maybe it's like 35% of our revenue today comes from offshore. And with the acquisition of the UK business, that moves up to all the way up to 45%. At an EBITDA level, the contribution of offshore is today about 21%. This acquisition will take us all the way up to 29%, which is quite significant. And that is really why we went after this opportunity. So the other thing is we also see an upside on this, because that business today is largely focusing on public sector. And yet it can be selling also to private sector, to commercial customers. So we feel that with our business in the UK that is already specializing in selling into commercial space, combining those expertise and helping our colleagues in Phoenix to move to the new segment of the market, will be able to realize an additional opportunity that they were not going after before.
You can respond to this very briefly. Some may say you're very brave to venture into the UK market when that country is going through their Brexit process and we don't really know what the outcome will be for their economy. Yes.
So we looked at that, and it's a very good question. And our feeling as a business, we get in market intelligence from our local people there. We feel that the space where Brexit is going to have an impact more on is in the public sector, where they will need to buy new systems in order to gear themselves up for this the decoupling. And the business that is going to benefit is a software business, because we are in the software business. We will be supplying those new systems to the government. So to us, Brexit is actually an opportunity versus a threat.
Okay. And now you're left with a couple more assets to dispose of as part of your strategy to dispose of your non-core assets. Just tell us what the progress is on that, and when you have finally sold them, what will you be using the proceeds for?
Yeah. So we are left now with major 3 businesses: CBI Telecoms, PowerTech Transformers, and Altec UEC. But the key businesses that are a drag to our earnings is PowerTech Transformers and UEC. And those businesses, we have already gone out to market saying that we would like to make sure that by the end of this financial year, we would dispose of those businesses. And we're still comfortable with that position. We're working with the potential buyers, and we hope that we'll be able to come out and be able to make announcements before the end of the financial year.
Okay. Now, we know that one of your auditors is KPMG, and they've come in for a lot of flack, and they've lost key clients recently. It's been well publicized. Now, given that fact, are you considering also your options with that particular auditor?
Yes. So as a company, a company that stands for high ethics, and for us, there are certain behaviors that are not acceptable. And so when we heard about this and also looked at the report that KPMG themselves have put out in the public, we were uncomfortable with that. But when we look at the actions that they've taken, very decisive actions that they've taken with regards to their leadership, we feel that this is good. They've taken the right things. also there is a further process that is going to be, that they are following. We would like to wait for the results of that process before we take a final decision on KPMG.
And then lastly, we had Finance Minister Malusi Gigaba giving his midterm budget for the very first time yesterday, not painting a very pretty picture. We're down on revenue, our budget deficit is likely to balloon, our debt is rising beyond expectations. Now, this is going to have implications for taxpayers. And next year, obviously, the government may well be looking for increased company tax. When you think about that from your perspective, do you think that this is going to just make things worse for companies operating in the South African environment?
Look, we are operating in a very, very tough economic environment as it is. And the speech that was made by the minister yesterday actually make things worse in terms of the operating environment. Our expectation is that more and more companies may be deciding to may end up going under, which is not a good thing for our economy. But at the same time, the other thing that we have seen elsewhere is when times are tough like this, most businesses tend to move more towards digitizing. Digitization and transforming their businesses into more in the IT space helps drive down costs. So there may be a stronger demand in the South African market of ICT products as companies try to rebase their cost structures to make sure that they survive in these tough economic environments. For companies like ours, this may be, unfortunately, it's a tough thing, but it's an opportunity for us to help.
Thank you, sir.